Hello traders, the title of the video is Pitchfork Tool Trading Strategy for trading gold US dollar precisely. All right, we are looking at the gold US dollar, the APX XAUUSD. All right, so here it is, gold US dollar. So I would like to take this opportunity to thank the trader who did ask me to compare this pair to the Australian dollar, because I recorded a video recently and there's that trader, Mr. Maguire. Thank you for asking an essential question, or for suggesting, or for pointing out, with your eagle eye, something that you have seen on this chart that is similar to the Australian dollar. So look at this chart. You see the price went down and now it was going like this a little bit here. And we put a pay attention to, I'm going to color now that pitchfork tool now into red. Pay attention to the red pitchfork tool. So price went down and now we have this red pitchfork tool. If I go now and I show you the chart of the Australian dollar, Australian US dollar, similar, you see here, price went down, you see, and it went, see, 1, 2, 3, going like this. So it's going along the edge of that brown pitchfork tool. If I color it also into red, you will see the similarity that Mr. Maguire, very beautiful name, Mr. Maguire. Are you Jerry Maguire? Now this to make you laugh a bit. So here it is. So we have also this support level for the Australian US dollar at 0.7009 prior to bull signal above, prior to bear signal below. You remember that? So the gentleman was watching that video and he said there are similarities. Yes, there are similarities when spotted. Right? So we want to, as I promised that trader, I say I will analyze the gold, US dollar. Right? So previously, all right, so you can see that if one is talking about pitchfork tool trading strategy, we can use different pitchfork tools. Sometimes trader will place one pitchfork tool on their chart and they just wait. All right, they say, oh, what's going on? They can't see anything. So you want to move it around, use different pitchfork tools. At one point, one pitchfork tool may be useful. Another time, that pitchfork tool will become useless. So like now, this green pitchfork tool is not that useful to us today. The current pitchfork tool that is useful to us is this one. Or another one may say, oh, no, George, it's this one instead that is useful now. You see now? 1, 2, 3. Another one may say, oh, George, now this is the one that we should pay attention to. Or another trader may say, George, no, that's incorrect. So the point I'm making is that we can use the pitchfork tool to look at the price from different angles. So none of those traders were completely wrong when they are saying that George is this one, George is that one. You see now? So what is happening now, if I use another pitchfork tool, all right, like this, hold on please. I need to change the color of it so you can see that there's another one there, color it down into pink to please the beautiful ladies. So here you can see. So now you can see the pink one is not that useful to me. It just annoys me right now to a certain degree, because all we need to do, you see the pink one, all we need to do is just to divide the upper half of the red pitchfork tool. You see this blue line here? That's the median line of the upper half of the pitchfork of the red pitchfork tool. So I don't need that pink pitchfork tool. It's not useful to me at this point in time. I'll prefer to refer to the upper half of the red pitchfork tool and to divide it into two. So right now the price was retesting a hot spot trading zone. Why? Because we have the intersection point between the level for 11353.78, 11353.78, and the median line of the upper half of the pitchfork tool. That was a hot spot trading zone. Right? To make it very interesting to you guys, I'll color into yellow so you know that that's a hot spot trading zone. And trader responded, this one got a tail alerting us that there were some buyers here. Why those people were buying here? One of the reasons why people were buying here is not only about the hotspot trading zone, it's just because people did buy it here before on the same level. You see that zone, they bought it there. So you want to pay attention to what has happened there before. They bought it there before. Here also they did buy it here before, same level, 153.78. So there is a demand to buy this gold or US dollar in the zone of 153.78. They have done it many times, so we can't ignore it. Most importantly, we are now at a hotspot trading zone and now here. So as the price going up now, the price is looking for a better resistance level. We're at a resistance level. There's one here. You see this trend line here, the upper level of the red Pitchfork 2. That's what people need to watch out for. So if you are day trading, scalping, just know that there's a resistance there. All right. And also this level 1254. Are you getting it now? 1254. All in all, my friend, I want to bring back one Pitchfork 2 also before we continue. So we are using, this is about Pitchfork 2 trading strategies. Very simple. The gorgeousness or the value of using Pitchfork 2 trading strategies is that it allows us not to fight the price. And also, we want to follow with the price. See here, price going down. Is as long as it stays within the boundary of Pitchfork 2, we want to give priority to bear signal that will allow you to fight the price. So you see here, if you do that, you won't be too much interested to buy when the price was still in this green declining channel, yes or no. Now you see it came out. When it came out like this, see, it was rolling, it was trying to retest the edge of the, so there's a bit of this what I'll say to you. Right, you see these people say breaks the ball, retest. Yes, use a different time frame trading method to trade it on the edge. That was a hotspot trading zone, by the way, this one here. But what we usually say to trader, when the price breaks the ball with key level, we will prefer it to go away from it, not to stay too close to it. But this one could have worked sometimes. Sometimes you will see that it will work beautifully, then start going up. But generally, we will prefer the price to deviate a little bit away from, okay, that key level or that key trend line before retesting. But now you can see that they keep pushing it. Price was coming quite close, so people were buying along the edge of the decline channel as it came out of it. And finally, it finished up here. By the way, this must be the 138.2% Fibonacci extension of this last move here. I don't want to draw it on the chart, but I believe that should be that one. See this move down. This move from here to here, probably this is 138.2% Fibonacci extension level of that move. Because if the price goes below the prior low, the next challenge for that bearish momentum after breaking that key support level is which level? The 138.2% Fibonacci extension level of the prior bearish move. From here to here. It did find a support there. Alright. Let's see whether I'm telling something true. Can you see 138? You see 138 on your chart? Can you see that, my friend? For the first time, can you agree with me? 138? Yes, it is 138.2% Fibonacci extension level or this prior move. Now, if you do not know what I've been talking about recently about the 138.2% level, it means that you need to grab your favorite coffee or tea and go to www.dayprotraders.com and click on 138.2% Fibonacci extension so you may understand what I've been talking about. So this is a very, very important reversal point. And it doesn't mean that definitely we have a reversal here, but there was a reversal. So anytime, this is another strategy that I want to share with you. If the price, like this, you see, it goes down from A to B, all right, and then it breaks above that level, all right, like it did here. So it bounces up first, go from A to B, and then bounce up, and then crash through that support level. If you reverse, pay attention, if you reverse at 138.2% Fibonacci extension level, you see here, you saw me talking breaks above and run away. You see this trend line here? That's what I'm talking about, deviation. Okay, you see, price go away from that. I'm talking about that trend line now. I'm going to color it now into orange so you can see. See, now it breaks a ball and You can see sometimes the price may not come back and retest the trend line itself, but we prefer horizontal line, a horizontal key level. So instead of coming all the way to retest this one, it stop at this level of 115378. Okay, that level where they are buying. They bought it here, they bought it here, they are buying here again. All right, are you with me? All right, so this is it. So now currently, apart from the red, if the price continue to goes down, we need to be aware of the media line of the red channel, the key level 15378, all right, and the red pitchfork tool. But currently, one can also pay attention to this brown pitchfork tool. You see here, 1, 2, 3. Those 3 points allow us to draw a brown pitchfork tool. So if the bullish momentum continue, this will be the current pitchfork tool that we must be watching, monitoring, giving priority to bullish signal in this section. We were giving bearish priority here. Now in this session, we'll be giving bullish priority. So we don't want to do crazy things. Look for bullish trading setup at hot spot trading zone. What are the hot spot trading zone? Intersection between the pitchfork tool and the horizontal key. Well, this is a hot spot trading zone. Intersection, hot spot trading zone. All right. So we can put more hot spot trading zone. Okay, you see that hot spot trading zone? This is oops. We don't want to do that. All right. What I was trying to do. Okay, hold on, please. All right. Okay, I was trying to move my hot spot. That's what I was trying to do. So this is again a hot spot trading zone. Are you getting it now? All right. I want you to get it right. Okay. A hot spot trading zone. A hot spot trading zone. Intersection between any part of a trend line and horizontal key levels. All right. Okay, so watch out for those resistance levels and use it. Here, right now, what is happening here, the price came down to a support level where people were buying before, and they were ordered there to buy, and people are buying again, taking it up gently. It can find a resistance on the edge of the red before tool and continue to go down. But before I forget, currently, what is happening? Now we want to talk about the current market pattern. What is happening now? What kind of trading strategy should we deploy at this point in time? We must deploy a consolidation trading strategy for the gold, US dollar. So the price now consolidating between the level of 153.78 and the level of 1355.59. The media line of that consolidation is 1254.69. So that's the low, 1153.78. Media line 1254.69. Top 1355. Okay. 59. So you see, people bought it here. They are taking it to the midpoint target at 1254. So if you want to buy, it will be better to have something that breaks a bull, retest, all right, or bullish chart pattern or bullish trading setup, a bull 1254. All right, the better low risk point is here at the base. Big buy as it's going up now. Okay, if you were not already in it, so the bull 1254, let's say bull retest or a bullish chart pattern or something higher low, something to a bullish trading setup above that level. Okay. Now, if they bring it from that level, that will be the midpoint target, and the ultimate target will be 1355.9. Consolidation trading method is here. It went up to that media line, a bit messy here. That's why, so be aware, it can be messy near the media line. So finally, see, it hit it, pull back again before they take it up. It was a bit messy here. All right. So the low risk point is at the base here. All right, this is what we are talking about. But one more thing before we wrap it up, talking about the Pitchfork tool trading strategy, using different Pitchfork tools to determine, the best strategy to deploy. All right. Have you seen that? Okay, we have here an inverted head and shoulder chart pattern. Anytime you see an inverted head and shoulder chart pattern, especially the monthly chart, don't ignore it. It will help you in the long run. So what you need to do at this junction is to measure the height of this inverted high and shoulder chart pattern here. So I'm going to use a conservative measurement from the closing price to the neckline. I'll call out the neckline into pink. So the neckline is corresponding to the top of our consolidation that I mentioned earlier on. This is my blue measuring stick. I'll call out my measuring stick here. Which color should be clear to everybody now? Oops. All right, I'll use black. So that's my measuring stick. And then we put it here, you see here, we put it on top of the neckline. And apart from those key level, because why do we need to do that? Because the price does not go up for no reason. Right, so this is a target level. So what do we do for those target level? We want to look for trading opportunity. If the price reaches those levels, look for trading opportunity, especially day trading opportunity, as I explained before in the video that I titled How to Day Trade Stocks Like Gold. Check it out at a 2-4 Stock Trader YouTube channel, digit 2, digit 4 Stock Trader YouTube channel. So that's the median line. So that's the target there. The midpoint target is here. Okay, the orange line here. All right. So first ultimate target at 1648.69. Midpoint, first midpoint target 1483.72. Note it down. All right. And then if it goes above the ultimate target, we'll set another ultimate target ready. We can do it now today and leave it on there. All right. And then we will have again a midpoint target somewhere in the middle there. Okay, is that midpoint? Okay, I'll call out the midpoint target again into orange. All right, and the ultimate target again pink. Okay, are you getting it now? Right, so we have a secondary ultimate target at 1938.58 and a secondary midpoint target at 1792.83. So we leave all those lines on our chart. Now our current strategy is to use a consolidation trading method. Anytime we want to day trade, swing trade, or position trade, we want to trade on the edge of either horizontal key level or trend line, or on the edge of the Pitchfork tool, break a ball, retest, or looking for bullish chart pattern above a key level or a higher low, okay, that is retesting a prior high, or a lower high that is retesting a prior lower low. So this is it, very simple. We are following a trading drill using the Pitchfork tool. But anytime we see a trading, setup, we use the trading drill. The setup, the signal, and the low risk entry point. If you are day trading, you want to day trade during the best time of the day, which means the first 2 hours when London or New York, all right, or Hong Kong is open. That's it. Those are the best time for day trading. All right. If you want to swing trade, personally speaking, the best time to enter a swing trade, in my view, is Tuesday. So on Monday we examine the market, and then Tuesday safely we enter the trade. But sometimes I'm not saying that one cannot enter a swing trade on Monday, but in my experience, that's what I have found, that sometimes Monday will go down, and Tuesday the market may start a trend, and blah blah blah. So like a first wave and a second wave before the third wave, yes or no? So is what we are doing, is a Monday, Tuesday, and then boom, at the end of Tuesday, we just try to enter our swing trade safely. So this is it. So this will conclude our discussion today about Pitchfork tool trading strategy for trading gold, US dollar, precisely. Well, George, you like that word so much, precisely, accurately. Was he accurate for you? George, I'm not convinced. Okay, if you are not convinced, please mark this video down. If you think if this video has been useful to you, please give us the thumbs up. However, if you think that this is an essential tutorial that can help traders that are trading gold or US dollar, all right, or other technical trader, feel free to share with your friend on Tumblr, Google+, Twitter, and also on Facebook. By sharing it, all right, you are helping us, all right, and I really appreciate that, all right. If you are watching this video on YouTube or on Facebook, remember our channel, all right. I will put this one on George Trio YouTube channel. Our channel is George Trio YouTube channel, all right. Subscribe to that channel and be sure to click on the notification bell, all right. If you're on YouTube and you don't know what we are doing on Facebook, our Facebook page is Stochastic-MACD. Please like our Facebook page and also stay tuned on Facebook and also on YouTube, so you can have your left hand side here on YouTube and you may have your right hand side here on Facebook. Sometimes I may put a video first on Facebook, sometimes first on YouTube, so you want to know what is going on, all right, so you can track my activities on YouTube and also on Facebook. So this will conclude our discussion today about Pitchfork tool trading strategy for trading gold, US dollar, precisely. I would like to take this opportunity to thank Mr. Maguire, who did put excellent comment. This is what we say, constructive comment will generate a new tutorial that can help other traders. So this is very, very nice. Thank you, Mr. Maguire. If you have any more suggestions, put in the comment section. I will be busy recording the next tutorial. Until the next time, enjoy yourself and be very happy. We are the XAUU24 traders talking about Pitchfork 2 trading strategies for gold, US dollar, precisely. Happy trading to you all, and I will speak to you soon. Thank you for watching.